Good evening, everybody, and welcome to Metropol TV, The Smart Investor. I'm your host today. My name is Ali Khan Sachu, and it's a pleasure to be with you this evening. We've got a guest in the second half, Bob Ndubi of Silverhouse Capital, and we're going to have a chat about the State of the Nation address that the President delivered this afternoon. I managed to catch most of it, and I thought that, the President was having to thread a political needle, as it were, and sort of deal with a number of cross-cutting issues, and we'll talk to Bob about that in the second half. But let me take you through what's been going on in the markets, and let me start with data that came out about Kenya's private sector. The expansion is now at the slowest rate in 16 months. That's our industrial private sector component of our economy. Now, the magic number when you look at private sector data is whether we're above or below 50%. Below 50% means that the economy is actually contracting. This year, China in particular posted a few months of contraction because of the tariff war, and there's been contraction in a number of parts of the world because of the level of uncertainty that we've seen in the last quarter of last year and spilled over into this first quarter. Kenya is expanding, but at the slowest pace for 16 months. The Nairobi Stock Exchange is up 13.99% year to date. And just to give you a flavor, compare that, South Africa is second best. That's up 9.84% this year. Nigeria is one of the worst performing stock markets. It's down 5.61%. And in fact, since President Buhari came to power, the value of the stock exchange in dollar terms has fallen by half. It is the worst performing stock market over that period anywhere in the world, which is quite interesting. And Ghana down 3.91%. Ghana, of course, raised $3 billion of Euro bonds about a week or so ago. And we, Kenya, obviously, and if you listen to the speech carefully, you would have heard it, we also have to issue a Euro bond relatively quickly because we want to refinance a maturing Euro bond that was issued in 2014 and obviously try and raise some extra money as well. But stock market wise, we're doing well. We're in a good spot. Of course, last year was a terrible year, and you saw that in the results. It was particularly difficult for insurance companies. They tend to have a lot of shares. Those share prices went down. But like I said yesterday, normally after a bad year, an annus horribilis, we get a good year, an annus mirabilis, and we're all hoping that's what we're going to have this year. Let me turn to now one of our neighbors, Somalia, and just speak about something which was reported today. The US has conducted the most airstrikes ever in Somalia in 2019 and in 2018, double the number of airstrikes that President Obama conducted during his tenure as president. And you can see what's happened there. The Al-Shabaab have started responding inside Mogadishu as a way of trying to push back. And we need to keep an eye on that situation because the Horn in particular has always been very fragile. People call it ungoverned space because it's difficult for a government to control it. But you know what? There's a lot of potential in the Horn of Africa, and everybody is looking for some kind of stability, particularly around port investments that everyone is making, and other investments. So keep an eye, but bear this in mind. Trump has been off the charts in terms of the amount of bombing that's been going on of Al-Shabaab in particular. Now, the African Development Bank puts out an annual report, the state of the economy for Africa. We did an interview today with the Director General for this region, Gabriel Nagatu. We'll show that early next week. But this was interesting. These are the cheetah economies in Africa, the top 10. This is where you want to be. You want to be in an economy where it's growing, that creates opportunity. So if you're looking at the continent, look at these top 10, because these are the ones that are outperforming. Remember, I told you before, 50% of sub-Saharan Africa is made up of just two countries. That's Nigeria and South Africa. And those two are not growing they're growing around 1.5%. In fact, if you look at population growth, it means people are worse off because population growth is outpacing the rate of GDP growth in those two countries. But what comes out of this analysis by the African Development Bank is that the fastest growing part of the continent is actually East Africa. Into East Africa, I'm counting Ethiopia, which is the second fastest growing economy in Africa after Libya. Libya, of course, is incredibly volatile. It's sort of boom bust, but this year, from an economic point of view, it's kind of booming, but off a very low, bombed out base. So keep an eye on that. And this is the bottom 10. This is where you don't want to be. This is where it's very tough. The economy isn't growing. The economies aren't growing, not creating sufficient jobs and opportunity. So very interesting perspective on what's actually happening. So Stephen, who's the producer, calls the first graph the cheetahs, and the second graph is definitely the snails. The IMF also reported specifically on Nigeria, and I just wanted to share what they're saying. They're saying growth is way too slow. Nigeria has a two-tier exchange rate, so it's got an official rate, but you know what? They are only trading minuscule amounts of currency at that official rate, which is around 305. They got a second rate, which is 360, where most of the activity is going. And just a quick point on that, if you use the 360 FX rate, then South Africa is the biggest economy south of the Sahara. If you use this other funny rate of 305, I call it voodoo economics. You've got voodoo economics not only in Nigeria, you've got it in Zimbabwe, where you've got bond notes and all kinds of funny currencies besides the US dollar, and therefore you have these enormous disparities. And we have this in a number of countries in Africa. And I, for one, and like the IMF is saying, look, get rid of this two-tier system. Be done with it. Go and find the real rate of your foreign exchange. And the Nigerians are very nervous about doing that. And I think it's a big mistake from an economic point of view. And the contrast I would give you is with Egypt. Egypt, under President Sisi, was in a similar position to Nigeria. But what did they do? They devalued the currency, they took the pain, they've taken the pain, and now Egypt is going gangbusters. It's growing at above 5%. Lots of people are looking at that economy, and it's exciting a lot of investors. And that's because he took hard decisions. Devalue the currency, find the right level, and then you really benefit as investment monies tend to come in. So the IMF stating the obvious. It's not clear to me. Of course, President Buhari's nickname is Baba Go Slow, because everybody says he's moving at such a slow pace when it comes to the economy and not making these reforms that he should do. And look at this, the tax base in Nigeria is at 7%. The tax base should really, in a properly functioning economy, be about 25%. In Nigeria, it's just 7%. So whilst we might complain about the KRA and the fact that they don't meet their targets, in Nigeria, they're just not even on the pitch. They're somewhere else. It's only 7%. The IMF is basically saying that under the current policies, the economy looks muted, and unless they do some strong reforms, growth would hover around 2.5%, which is less than the population growth, which means every year, on average, the Nigerians are becoming poorer. Of course, it's an enormous economy. There are many, many very rich people, but essentially in the aggregate, if you look at the whole thing, it's not growing at all. And that's why you get this cry from many countries, we can't eat GDP. That's why people feel less well off, because they are. It's not just an impression that they have. Let's turn to our neighbor up north, and I'm looking forward to taking the road up to Addis Ababa, because I'm told we can go on that road all the way to Moyale and then on to Addis Ababa, and I'm excited about that. I've been wanting to go there for many years, and particularly to drive up there. Ethiopia Prime Minister Abiy marked his first 12 months as Prime Minister, and he said they've attracted a record $13 billion of inflows in his first year in office. That's a big number if you think about it. They've got funds from the World Bank, they got $1 billion from the Abu Dhabi Crown Prince. He's really been very successful in terms of his investor relations drive. Public relations is the art of your persona or your company in the public field. Investor relations is really how you speak to investors, how do you interest them, how do you get them excited in your company or your country. And what he's saying is, when he's saying 13 billion, it means a lot of people want to support Abiy, they want to support Ethiopia. It's a 100 million market, just like Nigeria is, and a lot of people feel that the only way is up. And Abiy's saying, look, I've got 13 billion, it's a singular achievement in my perspective. Look, they got serious challenges. When he came into power, they just had 1 month's worth of foreign exchange reserves. I don't know if you heard President Kenyatta speaking that we had about 8-month reserves, which I think are the highest we've ever had. Ethiopia had 1 month, they would have run out of money. It would have been a difficult situation. He had to move with speed in order to turn that situation around. I, for one, think that he is the most consequential arrival of a politician in Africa since Nelson Mandela. You listen to the language, he speaks of a language of inclusion. He sent Isaiah Afewerki a love note. I don't think anyone has ever sent Afewerki a love note in his life, and he got one from Abiy, and look at what happened. It kind of, he solved this problem with Eritrea. He wants access to the ports, that's his real intention. And Eritrea, of course, has ports that he wants to utilize. But I think overall, it's very interesting. You had a very rigid system under Melesh. You had this very disruptive politician come into power. And you know what? He's speaking, he's talking the talk. And if he's done the 13 billion, he's also walking that talk, in my view. So I'm bullish about it. They've got lots of challenges, particularly on the ground. There's a lot of inter-ethnic violence. People feel excluded. The story hasn't filtered right down everywhere, but I think he's made an enormous effort at turning this enormous oil tanker around. And I think we should give him due credit. And really, if Ethiopia does well, we're going to do as well. There's a pull effect for both our economies. And I think, I'm glad we got a road up there, because for many years, they might have been our neighbor, but they were, as far away from us as North America. But now clearly there is a close bond between the presidents, and I think our economies can thrive together. And part of the whole Lamu project is all about giving southern Ethiopia access to the sea. Let me move on to India. India, of course, has an election coming up. Narendra Modi, the Prime Minister, is going to be standing for re-election. Of course, the border war heated up with Pakistan not too long ago, that Kashmir incident. The fellow with the handlebar moustache, the Indian Air Force officer, where's he gone? Because he was quite a character, totally disappeared. But the point is, what do you do when you face an election? You want to encourage the economy. You want people to feel better about themselves, feel good about their country. And what has happened here? India cut interest rates by 1/4 point in order to encourage the momentum for the ruling Prime Minister as he faces the election. You will remember that he ousted the previous central bank governor, who was a fellow called Patel, and was actually born in Kenya. But he wasn't prepared to listen to Modi, and I think Modi wasn't happy about that and got rid of him. And you can see he's probably got a more pliant central bank governor here who's ready to do his bidding. Let's move on now to the price of oil. The reason I keep going back and focusing on this price, let me tell you, because we can look at the price at the pump, but it doesn't really tell you necessarily, truthfully, what is happening in the oil markets. The oil markets have jumped about 34% since the middle of December. That's the price of oil. Why has it done that? People are nervous about the lack of supply from Iran. The US has imposed quite coercive sanctions on Iran's oil production. People are worried about supply out of Venezuela. This Venezuela is an extraordinary situation at the edge. You remember that quote that I gave you, that the only people who know where that edge is are the people who have gone over. Look at Venezuela. You can see that is an economy in a country that feels as if it's at a tipping point. So the oil market has run up 33% year to date. Keep an eye on that. It's going to start getting painful for Kenya if we run up much more from here, because we're going to have to write bigger checks every month to service the oil component in our economy. I'd like to turn to Germany. Germany, of course, the makers of BMW, Mercedes-Benz, world famous the world over for their industrial base. This is the engine that has powered Germany since the Second World War. Their factory orders, this is the work in fact, these are the orders the factories are getting, dropped 4.2% month on month. That's a very big drop in the industrial economy. It's down 8.4% from a year ago. And that is a great signal as to what the global economy is doing. It's telling us the global economy is weak, that it got a lot weaker in Germany in the last 4 weeks, and that it's been weak all year. And the reason for that, of course, I think is in part China. Germany is a huge supplier into China. China buys lots of Germany's equipment, machine-making equipment for its industrial production, and also Turkey. Turkey, if you've been to Germany, there are at least 3 million Turks that live in Germany, and there is a close connection between those two economies. And therefore, what that's telling me is Turkish weakness has infected Germany. You remember yesterday I was saying emerging markets and frontier markets have got to keep an eye on what's happening in Istanbul, because they could catch a very, very bad sickness and spread it into other emerging market and frontier markets. Madame Lagarde, who's the head of the International Monetary Fund, said yesterday, "A year ago I said the sun is shining, fix the roof. Today the weather is increasingly unsettled." And she's criticizing people, countries, for not heeding her warning and not building a roof over their heads so the day it started raining, you would be protected from it. Now, last year, of course, I told you, was an annus horribilis for the markets. 93 out of 100 investments went underwater. Only 7% were above water. But since the beginning of the year, we've seen a very strong start. China's up 31%. This S&P 500, which is the 500 top companies in America, and really it's a proxy for the American economy, is within 2% of an all-time high. It has recovered about 13% since the start of the year. And this is all about optimism. US-China trade optimism has set share prices on a bull run from China to the United States. And if you listen carefully, you will see every day there are at least 10 announcements by the White House about how they're close to a deal. And the reason Trump is so keen to keep everyone interested and keep everyone on an optimistic frame of mind, he's keen to game the markets. He is very clever and very aware of the stock market. And you will notice that is really one of the key risks to Donald Trump. If the stock market in the US falls dramatically, it puts a lot of pressure on the incumbent president. You kind of sink or swim on how well the stock market is doing in the United States of America. 66% of stocks closed above their 200-day moving average. 200-day moving average is an average of the share price, and it's normally seen as a bullish signal if something is closing above its 200-day moving average. When you've got 2/3 of the stock market closing above that average, that's a bullish signal. Of course, nothing is certain in the markets. Things could turn sour in a minute, and we could see a sharp sell-off. But for now, Trump has arranged to meet with the Chinese Vice Premier Liu on Thursday, and there is very bullish talk that they're now in their final stages of that discussion, and hopefully we'll see some kind of resolution. There is a famous saying in the markets, buy the rumor, sell the fact. And I think that is something we should all consider. The market has been buying the rumor, but I think the day we get an announcement of an agreement, the market might well sell off because all the good news will have been put into the price by that stage. I look forward to interviewing Bob Ndubi in the second half. He's from Silverhouse Capital. He's one of the founders. It's an investment firm. We're going to talk about what the president said. We're going to talk about the Kenyan economy. We're going to just take a real deep dive as to what exactly is going on. So with that, we'll take a break. This is Metropol TV, the first 24-hour business channel here in Kenya and East Africa. This is The Smart Investor. My name is Ali Khan Sachu, and we are glad that you've dialed in. We appreciate your support. We look forward to your feedback, and thank you, and see you in the second half momentarily. Welcome back, everybody, to Metropol TV, 24-hour business news channel. This is The Smart Investor. My name is Ali Khan Sachu. I'm your host, and we've got a great guest with us in the studio. This is Bob Ndubi. Bob is a managing partner at Silverhouse Capital, an investment firm. And thanks, Bob, for coming all the way from Nakuru when we kind of called you back. So thanks for coming through for us this evening.
Thank you.
And welcome.
Thank you very much.
Bob, you know, obviously the State of the Nation address is a once-a-year event. It's a way for the president to set the scene. It's like the State of the Union in America. I think can we start with that? I mean, what did you hear from what the president said? I thought it was a politically difficult needle to thread for him, and I felt that he balanced it sufficiently, maybe not so much of that vision thing we saw at the beginning of his term, but it's more practical. What was your takeaway?
Thank you.
Pleasure.
All right. Obviously, the president did a very good job balancing it. But
yes.
The trouble with balancing, like everything in life, is then, you know, you disappoint almost everybody else.
That's a fair point.
Yes.
So you felt that it was disappointing to people?
Frankly, I think it was underwhelming.
Underwhelming.
Yes. Yes. I mean, we're in that position in this country right now when there are really challenges. There are talks about corruption, there are issues about liquidity, there are things that are not working. And it's in a time like this that you expect that, you know, the number one citizen, who happens to be the president, will step up and crack the whip. And speaking for myself, and I'm sure I speak for a lot of people, we feel that, you know, in the process of balancing too many interests, the president really did not move the nation forward when he had a chance to.
Let me ask you this, because I listened very carefully, and I think everyone was referencing a previous speech when he asked a number of his cabinet secretaries to step aside, and he really cracked the whip. And this time the message I got was due process. It was, you know, things are moving along. We've got it happening. We're not going to make arbitrary decisions. Did you feel that message was lost, or it didn't come through?
Then the point, what hit me is that if we've done it before, and we are saying, you know, when we talk about integrity issues, they're not legal issues. They are usually public opinion issues. And we are at the point where we are saying, no, we're not asking the president that, you know, some people need to go home. What we are saying is that action needs to be seen to be taken. At least, at the very least, what we saw a couple of years ago, is it possible for the president to say, look, the vibe coming out is not very good. Mr. So-and-so or Miss So-and-so or Miss So-and-so, could you please step aside so that we allow the due process? Because the argument we had a couple of years before is that so long as this person is in this office,
it's difficult to prosecute.
It's yes, and we've seen that. We've seen that going on in a number of offices without fingering particular offices. We've seen high-profile officers who've been taken to court, and by virtue of the offices they occupy, what you're seeing is that you have a battalion of lawyers. You have one client being represented by 40, 50 lawyers, which then makes a mockery of the whole process. And what we're expecting is that the president, given this opportunity, should have, at least in the public opinion, should have been seen to be doing something about it and said, look, we have all this talk about corruption in this ministry and that ministry and that ministry. We are not saying that you're corrupt. We are not saying that you're going home. What we are saying, look, could you please allow the different government institutions to go through your ministry, and clear you and say, look, there's been talk, but due process does not seem to, either vindicates you or confirms what the rumors have been. Now, if you may allow me, some of these things we have it on authority of the Auditor General. We have it on authority of the DCI reports and EACC. And these are government institutions. And if it's government institutions that are raising this, then I think we have an obligation, and the citizen, number one, has an obligation to at least calm the waters. Yes.
So you're saying that there's rhetoric, but there isn't action. There
isn't action. In fact, to be very honest, listening to the president, I said, what I've heard him say in a number of platforms, whether it's a public forum or addressing what we had as a corruption conference at the Bomas, there's really nothing new he said today. And that's why I say, looking at the anticipation, and which I think the president himself was full aware of, because at some point he did make reference to the point that he's under a lot of pressure to sack some people. So that tells you that he's aware that the public expectation is at another level. And we do not want it to look like, the president comes out and threatens and talks and nothing happens.
So politically speaking, how long can the president take the current approach he's taking before, public opinion becomes too much and he can't balance? How long can he keep balancing?
I don't think it's long. And I'm not a politician here, I'm just looking at it purely as a businessman.
Yes, but it reflects in our economy.
In our economy, yes. And I'm looking at it that, if you look at what is going on right now, we have a very confused state. We have a scenario where you have the ruling coalition on one side, or party for that matter, but you have the people who are cheering it on are people who are supposed to be in opposition.
That's what I was listening to, all the opposition MPs
yes.
after his address, and it was very strange because everybody was so supportive.
Yes.
Yes.
In fact, coming like I mentioned, coming down to the studio, and at some point I was listening to this speech, and I'm thinking, those of us who are alive 2 decades back remember one of the senior politicians, an old man who, the country mocked by the fact that he said, addressing the former President Moi, and he said, "You only want one multi-party."
Yes.
Tunataka multi-party moja. Essentially, that's where we are.
Yes.
Because what we have is members of the opposition who are ankling to be part of government. And what that tells you that we have an entire, political class whose only interest is personal. So long as the personal interests are taken care of, there's nothing ideological. It's it's both embarrassing and unfair to the citizens of this nation.
Let me now move it on a bit from that, Bob. Yeah. You know, we've seen GDP prints of 6.1%. Today, the president spoke about 6.3%.
Yes.
Why is there well, first of all, what is driving that growth? And then the second question is, why are people not feeling, 6% isn't bad. People should be feeling better off given the population growth is what, 2.5%. But why is practically the universal refrain from the big corporate to the mama boga on the street that they're not feeling any trickle down?
Such, if you may allow me,
you are allowed.
Yes, if you may allow me. You see the point about numbers and GDP being one of the numbers. When we talk about GDP and say it's grown, it sounds good. And for men like you and I, or people in our profession, people dealing with numbers and economy, you know what you're talking about. But then the question is, how many of us understand what that is when you're talking about the GDP? And let me explain it. And I want to break it down. I want to break it down. And this is, I want to give you an example at a household level.
Please.
All right. If in your house, you went to one of our local banks, all right, and borrowed 2 million shillings.
Yes.
And a month ago, you didn't have a car, you lived in a certain neighborhood, and what is going to happen is this: measuring you now, we'll be able to look at such you now as a car. He's got a pair of sofa set. He's got a new plasma screen and all that. Obviously, is a man doing well. So if we measure is what it looks like and what he's got, how he's grown. Last month you didn't have a car, now you have a car. So obviously you've grown.
Yes.
All right? But now what we need to ask, how have you grown?
Is it sustainable?
Is it sustainable? Now, what we have, and that's what we need to tell the nation.
Yes.
What we have is a debt-driven GDP. And that's the growth we are seeing. And what we are measuring, we're measuring at the macro level. What was this that has moved here? Now, what are the things we should be measuring? And that's a question we need to ask.
Tell me.
Why is it everybody's saying that, like you rightly said?
That's, unless it's a sports betting company or somebody in the digital economy, or maybe agriculture last year did well, everybody else is not feeling that benefit.
I mean, think about it. The small business person is crying.
Can't get credit.
If you take a walk around the city, for the first time, downtown Nairobi, you can walk and get a shop. For many years in this city, to get a shop, you needed to pay something we call goodwill. That's a Kenyan creation.
Yes. So that's an upfront payment in order to secure the shop. Today,
Yes.
do you have to pay goodwill?
No. In fact, I happen to be aware of landlords who are giving incentives. They say, look, we're giving you 3 months to set up. We're not charging you in rent. If you pay us 1 year upfront, we're going to charge you of the rent. All right?
The real estate was a big driver, Bob, of that economy. So what you're saying, it's no longer pushing, it's a pull.
It's a pull.
Yeah.
It's a pull, and those are things we are looking at. I happen to be aware that, and to the credit of the president, he didn't mention it today, that the suppliers of government, for example, are not getting paid.
So we had the deputy chairman of Kenya National Chamber, and he estimated the amount of money that's due, which is not reflected anywhere on the balance sheet, is more than $2 billion.
Yes.
Do you think that's a correct figure?
What is in my possession right now is actually $3.3 billion.
Wow. So you're saying these are unpaid bills by the government. So when people are saying just pay your bills, forget everything else, this will help. Is that correct?
That's correct. And we need to understand that when you have a lot of local businesses that are owed by government, what are the consequences? What it means is that local businessman is not meeting his obligation, whether it's back to the bank or to their suppliers or to their employees, and it goes round. So that's part of the reason why we are talking of liquidity issues in the country right now.
Liquidity, by that you mean there's a lack of money in circulation?
There's lack of money in circulation.
Yes.
And those are the things I think we need to really focus on. Yes.
So, okay, so let me ask you another question. If you were sitting here, if the president was sitting there and he says to me, Bob,
Yes.
tell me how I get this thing motoring, tell me what the silver bullet is, tell me what to do, what would you be saying right now?
If I had a chance to
Yes.
speak to the president, simple, Mr. President, fix the small issues, first and foremost.
Okay.
Let's well, the big infrastructure projects are good and all that, but let's go progressive. Let's fix the small issues. Let's make sure that the smaller trader is getting paid, is accessing the market, the farmer is getting his input, is accessing the market. Once you access that, because then let's not get ourselves to a scenario where the bigger infrastructure projects become white elephant projects.
Yeah. Are you confident about the infrastructure projects we've done, the railway? Do you think it's going to pay off? Do you think it was a wise way to spend our money?
I have mixed feelings about this, and I will explain. At the national level, sounds like a good thing to do. Then you ask yourself real questions. You start asking yourself, we are doing a rail, fantastic, but we are killing local enterprise. So
At the expense of the railway?
Yes.
Because we're borrowing money to pay for that, and that's causing this 3 billion backlog.
Yes,
Yeah.
that is one. Two, this rail is one way.
Yes.
We are getting things in from the port to inland. What are we exporting out?
Yes.
Because at almost every corner of this nation, whether you talk to farmers, they're up in arms. I mean, it's in public domain. What has been going on in the Rift Valley with tea farming. We know what has happened to coffee farming. The sugar industry is a sad story.
15 billion shillings down the drain at Mumias.
Yes. So now the question is, how does this SGR help the nation apart from making us a client state?
That's a heavy charge.
Yes.
Of the Chinese.
I don't have to mention anybody,
Yes.
but just think about it.
Yes.
Because, I mean, think about it. We are getting literally everything in. And you and I know that what that means is that the little resources we have, we are creating jobs elsewhere. Our forex is being spent elsewhere. If you're getting in, what is it we're doing right now? You're getting in toothpicks, eggs, name it. What does that mean?
I mean, we're not producing it.
We're not producing
anything. I think our imports are 3 times higher than our exports.
Yes.
Yes.
So then how do you intend to sustain the strength of our currency?
So let me out, but the currency confounds everybody, Bob, because everyone tells me that currency is going down and it doesn't. And I think there are other dynamics as well, regional safe haven demand for the Kenya shilling, given what's happening in some of our neighbors like
Yes.
Tanzania, where people might not be so comfortable with the government and looking to sort of make sure that their savings are safe.
That's true.
Yes.
But you have to remember that that's for the short run. I love the story you just ran about Ethiopia. I mean, who would have thought Ethiopia 10 years ago would be where it is?
Yes.
They are now direct competitors.
But they've had a very infrastructure-led model, Bob. You know, they've spent a ton of money, but admittedly, he admitted as much and said he can't continue down that road a year ago. And I've noticed not only did he bag 13 billion, he's renegotiated his loan for the railway, so now it's a 30-year loan. Are we making long-term investments with very short-term borrowed money? And, you know, is that part of the problem as well?
That's a large part of the problem. The other part of the problem is that a lot of this money is actually not going into the infrastructure. We all now know, and this is again in public domain, that a lot of this money is going into private pockets. And speaking of Ethiopia, you need to acknowledge that Ethiopia had 3 advantages that we don't have here.
Which are?
One is that the infrastructure development in Ethiopia didn't face the kind of corruption and overpricing, actually corruption and overpricing that we faced here. That is why if you look at the comparison, what they've spent
on their railway,
on the railway, for example, or the infrastructure projects.
So they're getting better value for money.
They're getting better value for money. That is number one.
ROI is going to be better.
Yes, that is number one. Number two, the fact that, I mean, in terms of numbers, Ethiopia is 2.5 times our size.
So the population.
The population, they are that.
But it's not as sophisticated. Our human capital is much more sophisticated. I mean, you know, if you went out in the street and you and I wanted to find people for us to join us to work, and we would find them, I think, more easily in Nairobi than in Addis Ababa.
That's true. That's very true. Again, let me not sound like it's all doom in Nairobi. We have our advantages.
Yeah.
And I guess part of the reason why we raise these things is that we can be better than where we are.
Yes.
And we've had a head start. And we
can't lose it.
We shouldn't lose it. And we should demand for better. The worst mistake we can do is just compare ourselves with, you know, the worst possible available. And I'm not calling our neighbors the worst possible available, but I'm saying we've had a head start. We've got a fantastic trained manpower. We've got, you know, the best of, I mean, I don't think you can get better human resource than we have in this country, right? But how are we translating that advantage? How do we harness that and make sure that the nation is moving ahead?
So let me now, you know, you've dissected it very well, and I really appreciate that.
Yeah.
Now, you're an investment company. Let's imagine I've turned up from, for example, out of Washington, and I've come to you, Bob.
Yes.
I want to put some money to work in Africa. I pick Kenya. Where would you tell me to put my money?
I'll be very honest with you. Part of the reason we set up here, we just maybe for purpose of information, I would like to tell you that we are also registered in the UK.
Yes.
But our focus is here for a very simple reason, that anybody watching the global trends will realize that the future is in Africa.
It is.
All right? The opportunities are here. So if you came to me, or as people coming to me, we have also identified particular areas. We know for a fact that for reason to do maybe with our education and our people, we seem to have an advantage in the ICT sector.
Okay.
All right.
So you like that sector?
We like
growing
that.
at a 20% CAGR rate for 10 years, I think.
Yes,
if you include the telecoms.
If you look at the telecoms, so we have a focus on that that particular sector. But as a true son of the soil, I also appreciate that if we are focusing on moving this nation forward, one of the advantages that Africa has is the fact that Africa is young. The population is young. If we are going to enjoy
18 to 20 mean age.
Yes, if we are going to enjoy that dividend that comes out of having a young population, then there are certain areas we must focus on. We must focus on, in our opinion, we must focus on 3 areas. We must focus on ICT, we must focus on agriculture, we must focus on sports. And now, the reason why you're focusing on this, you realize that if these particular areas are done well, the advantages that come with them. One is that in terms of return on investment, it's very high. What you're putting in versus what you're getting out is, if it's done right. Number two, especially the 2 areas actually the 3 of them, they can take huge numbers of our young educated population, and you do not need a lot of capital outlay. If you deploy your capital diligently and do your work, your homework right, those are growth areas. And as an investor and as a Pan-Africanist, I think that those are areas we need to pay attention to, because we have a young population that needs to get jobs, and these things feed into each other. Because if we are talking about issues of economic growth, issues of insecurity, issues of all those things.
Absolutely.
Yes.
And you can see where it's not working, from Khartoum to Algeria, and you can see the consequences of what happens when a young population feels excluded, doesn't feel included in the economy, right? It causes a problem politically.
That's true. So that then becomes our responsibility, both, actually not just both, everybody, becomes the responsibility of government, for those of us in private sector, for those, in the NGO sector, in faith-based, every single person in this continent, and particularly in Kenya now, if you've had the opportunity to go to school, to live beyond a certain age, then it becomes a calling. It's just beyond trying to make money for your organization or yourself. It becomes a legacy issue that then we must focus in ensuring that, you know, we've been lucky, we've had our time, we've had our education, we are doing whatever it is we do. Then part of making sure that the next generation does better than us, there are certain areas then we need to put a lot of focus on.
Bob Ndube, thank you very, very much for coming in and for giving us such a realistic perspective on the place that we're in now. And we look forward to engaging with you again, and thank you for making the trip all the way from Nakuru at short notice.
All right, thank you, Sachin.
Thank you.
All right, thank you.
This was Metropol TV, The Smart Investor. My name is Ali Khan Sachu. Thank you to my guest today who gave us a very, very a granular look at what's actually happening on the ground. That was Bob Ndube of Silverhouse Capital Investment. We're very grateful. Thank you all. Tune in tomorrow at the same time. Tune in to Metropol TV for your latest business news. And please give us your feedback on Twitter, on Instagram, on Facebook. Tell us what you want to hear about. We'd love to hear from you. Thank you very much again.